Hi guys, so on today's episode I'm going to be talking about which time frame should you use to refine order block entries. So here's my general motto: you analyze with the 4-hour entry with M15, analyze with 1 hour, you can use M15 entries or you can use 5 minutes entries. If you analyze with a daily, you can refine it in such a way that you enter using a 15 minutes to avoid a to allow for tight stop losses. So sorry for that. So it is important to come up with your own set of rules in order to confirm an entry. So for me, I think on issues of time frame, other people prefer analyzing with a daily, other people would prefer a monthly. For me, it would be too slow. So I would prefer a 1 hour or 4 hour or even 30 minutes. But 30 minutes, you need someone who actually has been using this technique for some time. So which time frames should you use? So you can see here we've got a bigger picture time frame, the time frame you use for analysis, and then we've got on our right time frame of entry. So if you are using monthly, it is advised to enter with a D1, but you can actually refine it further such that you enter with an M15 or with a 5 minutes. Then if you're using a weekly, enter with 4 hour. If you're using daily, enter with 1 hour. If you're using H4, you can either enter using 15 minutes time frame or even 5 minutes. If you're using 1 hour, you can use 15 minutes, you can use 5 minutes, you can use 3 minutes, you can use 1 minute. Depends on the type of a trader you are, and if you can see the basic reversal pattern. So those in red can be refined further for good entries. Then as for me, I recommend that everyone enters trades using a 15-minute time frame, because it will be clear and not so noisy compared to the M5 and M1. Too much noise on those time frames. So what is the setup you will be using for refining of entries? So like from our basic, we've got lower low, lower high, lower low, lower high, lower low, then break of structure. We are breaking this one to give a new higher high, and then we can have return to this order block, or we can return to this order block, and then we go up like I was trying to demonstrate there. So if we are in an uptrend, we've got higher high, higher low, higher high, higher low, higher high, and then we've got break of structure, return to order block, and then price will definitely do this. This is the ideal setup you should use. So here's an example. We're looking at V75 1S index on an hourly time frame. So like I said, if you're using 1 hour time frame to analyze, then definitely you will need to enter using an M15 time frame or an M5 or an M3 or an M1 time frame. So like I was explaining, price is forming 1, 2, 3, 4, then price went up, broke the structure like I highlighted, break of structure, and then return to what to order block. So this one becomes like I marked here. I was using a laptop, thank God. And then you can see that there are a lot of spikes there. That's why most of the time when you see people's screenshots, they would have entered on spikes, because if you use this way of analyzing and use it also to enter trades on the time frame I advised you to use when you are entering trades, you actually see that your trades will be at those spikes there. So as usual, this setup is a high probability trade, guys, and you should take this setup seriously. If you don't understand my videos, or you think I'm using too much slides, you need practical, please comment. I can actually make a recording using a laptop so that it's clear for everyone. So here now we're looking at what? At the time frame of interest. So I said if you're analyzing using H1, you can use M5, you can use M15, you can use M3, you can use M1 for entries. So what are you expecting here? Same setup which you saw on the time frame of analysis, which is we're in an uptrend. So higher high, higher low, higher high, higher low, higher high. We've got break of structure and return to order block, and then price will definitely move like this. This is the basic market structure which everyone is expected to know if you think Forex is for you. So here where there are arrows, these arrows 1, 2, you can see that they are pointing where there was break of structure. So with break of structure, there is return to what? To order block, and then price just went wild and going down. So yes, guys, thank you for watching. Please subscribe. Please subscribe. Please subscribe. Thank you. Have a nice day.